We've got to do that again. Because even me, I was looking at you. and even though I was saying that, because I said the last thing again.
Well, yeah. That's why I wanted to know. And the reason I went to say rubbish. Hi guys, and welcome back to the channel. As you know, Basira and Tosin, a couple navigating our way to financial freedom through properties. Today, we're going to be walking you through a bridging loan and fees that come along with a bridging loan. So I know there's a lot of misconception and confusion around bridging finance. First of all, we will define what a bridging loan is, and then just show you an example of what an agreement in principle is, head of terms as some people call it, for a bridging loan is, just so that you see fees that you should look out for and what the terms look like.
Perfect. So should we get straight into it?
Yes, we should get straight into it just right after we define what a bridging loan is.
So a bridging loan is...
You forgot it.
I thought we were going to... A bridging loan essentially is a short-term finance used essentially to bridge the gap between when you have the property and then
moving that property over to a long-term mortgage.
Yeah, exactly. Yeah. So that's what people tend to use it for when you want to try and raise cash quite quickly as well. I know there's some misconceptions about the interest rates that can be quite high.
Yeah.
But we thought it would just be good to go through what it looks like, because I think it's something that we would have appreciated at the start of our journey if we had something to look at like practically. So we're just going to go through one that we've actually received. We've tried to make this anonymous, of course, as much as we can. But I think that's all.
So don't be upset about the black boxes.
But we don't want to get in trouble, okay? We're not out here to be getting in trouble. So if we just go from the top. So at this point, you would have spoken to a broker or a few brokers, and you would have received a few heads of terms, as they call it, or agreement in principles, after they've taken some details from you about the property. And then you essentially get this in your inbox, and it's time to look through what they have to offer. So it starts from the security address. So obviously that's the address of the property that's in question. Then we have the estimated value of security. So essentially this is what is the open market value of the property. Some lenders tend to differentiate between the two. So that is the value of the property and the purchase price of the property. So the purchase price the next one is 79,000. So what is the actual price you are paying? So what offer did you get accepted? It's 79,000 in this case. Now the total gross of the loan, that's 85,000. So essentially that is what is the amount of the loan that you are getting before any of the fees is deducted. The term of the loan, 9 months. This is essentially what's the duration of the loan. I think it's quite self-explanatory, but you can request for this to be longer if you think that the project may take longer, but your goal would be not to take that long. Because
obviously the longer you take, the more
the
interest amount.
Exactly. So the longer you take, the interest amount would obviously be more. So you'd be paying more on your interest. So the goal really is to do it in a shorter time frame. The overall rate of interest for the term. So really this 1.33% is an average of it, because if you look on the next one, it has the primary monthly rate of interest, which is 0.995%. So that primary monthly rate is the initial rate of interest, and the next line, term for the initial rate of interest, essentially explains that. So what this means is for 6 months you'll be paying 0.995%, and then the secondary monthly rate of interest is 2%. So then if we just go back to the overall rate of interest for the term, 1.33%, that is almost a combination of the 0.995% and the 2% averaged out for the entire term of the loan. Correct?
Yes. I don't know why you're asking. I'm not a lender, but I believe you've explained that correctly, because that's the average period. So over the 9 months period, which is the addition of the initial period, which is the primary period of 6 months, plus another 3 months, which is secondary period, being a total of 9 months. So if you take out the whole 9 months term, your interest rate will be 1.33. But if you use that bridge just in 6 month period, you'll be paying 0.995. And then the 2% then kicks in on your 7th, 8th, and 9th month.
Yeah, exactly. So it has term. So we've done the term for the secondary loan. So the where we interest deducted over the term. So that is £10,174.50p. So that's how much interest they'll be deducting for the 9-month term. Then we go into the legal fees.
But then before legal fees, we should also mention that, this 10,000 figure here is the 9-month period over the average of 1.33. But if you don't take as long as 9 months, if you finish off the project in 5 months, then what you don't spend or the period you don't use the money for, that's refunded to you.
Yeah, so what I was going to say, I was just going to say later, but thank you for... No, that's fine. Thank you for saying it now, so you can see the term of the loan is 9 months, but, we've tried to think about ways how we can, reduce our costs. So we asked the question, what if we actually finish a project in 3 months, or even 2 months, or 4 months?
Or 2 weeks.
Or 2 weeks, if you're a magician. Some lenders say there's a minimum term. So I did ask that question to the broker, and originally I was like, oh no, I don't think there's a minimum term, but then later on confirmed that actually for this it's a 4-month minimum term. So if you finish a project in 6 weeks, however long, if it's less than 4 months, you have to pay that 4 months period. So at least the lender knows they'll be getting a minimum of 4 months interest rate from you. So just bear that in mind. So if you finish the project in 3 months, you'll still be paying the 4th month, and at the 4th month then you can give it back. Another thing to think about term, I was going to say, was sometimes you might want to make sure you have enough time, so including the time of the project and then the exit period. So the time that you're waiting to exit onto a long-term mortgage, you need to think about that time as well. So you may finish a project in 3 months, and the 4th month is the waiting period for you to go through all the administration to go into the mortgage. Long-term buy-to-let mortgage. Yeah.
And then legal
fees. Did you want to take that?
No, I like the sound of your voice.
we are together. You don't have to keep these lines. Is okay. So legal fees has an asterisk there. So essentially it's from 1,350 plus VAT. That's for an individual borrower. In our case, we do things through limited company. So what applies to us is the £1,650 plus VAT, and that's just for if it's one director. If you have 2, then there will be an additional, but they haven't stated what the additional is here, because we've told them it's just one director for now in our case. Then we have the survey fee, which is from £360 plus VAT. The facility fee is £1,700, and you can see there's a difference between the asterisks behind each word. So the 2...
What's that word you say?
The asterisk.
Oh, okay.
Right, how do
you say it really fast?
How do you say it?
Asterix.
Okay, so the 2 here, it denotes, as you can see, so it says denotes fees are deducted from the gross loan facility. What does that mean, Tosin?
When she does that, it means she doesn't know.
I do know. I can tell you easily.
So, denotes fees that are deducted from the gross loan. So obviously, in this case, if we come back to the top here, the gross loan is 85%. 85,000, but 85% on the open market value, which gives us 85,000, because the open market value is 100,000. So that means the fees here that have double asterisks will be deducted from this gross loan amount. So facility fee, which has double asterisks, will be taken out of the gross loan. The additional broker fee will be taken out of the gross loan. The title insurance will be taken out of the gross loan. Yes. So all of that will be taken out before the money is then handed to you as net loan value.
Perfect. Thank you for that great answer.
Do you want to take the 1 asterisk?
I will take the 1 asterisk. I don't know if I'm saying it right. So it says it denotes fees that are payable up front. So essentially, you'll be paying that up front. I don't know what's another way to say it. So there's 2 ways actually. They do say it's fees payable up front, but I think you also have the option to add it to the loan. So I had depending on the lender. The conversation that I had, she did ask. Sorry, the broker asked whether I wanted to add it to the loan or just pay it up front, and we opted for up front. So that's essentially the difference between the 2.
Yeah, which means for upfront, which means you pay it. So once you instruct the lender that yes, we want to apply for a bridge with you and whatnot. So we're going to pay this up front. You pay the legal, you pay the survey. They're not going to retain that out of the gross loan. You pay that before they actually start the application. So that goes first out of your pocket. Before you even get money.
So make sure you have that in your numbers as well, so you're not caught out on that. Then additional broker fee, £850, arrangement fee, paid on completion, so that's only after everything has been completed, that's £425. You have the title insurance, £224, and your broker would get you in touch with insurers as well.
Or if you have your insurance broker,
then that's fine.
Just need to ensure that the insurance you're getting complies with what the lender requires.
Yeah. And then we have the net loan, which is £72,015.50, and that's essentially what's coming to you for your project. So to buy the property and potentially refurb if you have it,
which then means you have to find the balance to make this up to the purchase price of $79,000. And then if we just slide down a bit, scroll down or slide down, just to look at the terms, just so you're familiar with terms that come with a bridging loan.
So as you can see here, it talks about all of the separate requirements that's required to be met in your heads of terms. So as you can see, it has things like making sure that it's fully signed, you have the proof of ID, you have your accountants and reference as well, your credit reports, making sure that you pay the legal and valuation fees, and that a surveyor has also done the report, inspections. If it's a development loan, it doesn't apply in this case. Here, the point about the minimum term I referred to earlier, that states that here as well. So it's a minimum term of 4 months. Also that you've thought about your exit route and what that is, and some evidence may be requested. It just depends on a case-by-case basis. What the warranty is that's available as well. Any pre-development conditions are satisfied as well if development applies here, and any off-market transactions that require ID for the vendor. Now, company loans, did you want to take that one, Tosin?
Well, as you can see there, we just run through it just so you're familiar with what potentially can come with, a bridging loan terms or heads of terms. So company loans will require PGs from all directors.
And PG stands for essentially personal guarantees.
Yeah, and a floating debenture note. All clients will be required to instruct their own solicitors in addition to the lender's legal team. Obviously, we've blocked out the lender's name there. And please note that you will need to obtain a face-to-face advice from your lawyers. The firm of solicitors acting for the client must have my reading is not great.
Two partners.
At least, so it's not my error. Must have at least 2 partners and professional indemnity of at least £2 million. So you can just see all of that. You can pause the video and just read through and just understand. And it was also mentioned that redemption will be subject to legal charge approximately £495. So that's your exit fee upon completing and returning the loan that you took out. You'll be subject to a fee of £495. So yes, that kind of covers a typical head of terms.
Hope that wasn't too tough.
Hopefully. But if it was, you can watch it several times over. Yeah,
exactly. So thank you guys for watching, or thank you everyone for watching, I should say.
And we'll see you guys in the next one.
See ya. Bye.
Why you run from me?
Man.
Me a day like this, a day inside the just lean in. Not because I did maintain your breath throughout the video.
Exactly.
Why you smile? Say,